Germany, Europe's industrial titan for 80 years, is hemorrhaging factories. Meanwhile, Poland just recorded its 34th consecutive year of economic growth. Not a single recession since 1992. While shutters auto plants, Warsaw attracts investment at rates the West hasn't seen in decades. Here's what almost no one is saying. By 2030, Poland's per capita economic output will approach Germany's so closely that the psychological gap, the perception of who Europe, may vanish entirely. This isn't a feel-good underdog story. This is cold mathematics colliding with geopolitical gravity. Most analysts still treat Poland as a peripheral economy. They're wrong. The data reveals three structural forces: manufacturing migration, productivity's energy crisis, converging to redraw Europe's economic map faster than any forecast anticipated. Over the next 14 minutes, we'll show you the proof. The IMF projections mainstream media ignores. The 316% GDP per capita growth since 1995 that dwarfs Western Europe's gains. And why Germany's export-driven model, built on cheap Russian gas and Chinese demand, is fundamentally broken. This matters for Poland, the US, and the UK, because it redefines who holds leverage in NATO, who anchors the EU's eastern flank, and where's smart capital the next decade. This is why Poland will overtake Germany by 2030. Let's examine the data. For 30 years, one economic fact seemed immutable. Germany was Europe's undisputed engine, the middle stand. The trade surplus empire. That era is ending. Poland's GDP per capita sits at $45,000 today. Germany's is $65,400. Still a gap, but watch what happens when you map the trajectories. Poland is projected to hit $55,200 by 2030. Germany, $65, the same figure it holds today. Zero growth in per capita terms over 6 years. Now, that's not an overtake. Let's be precise. No IMF forecast shows Poland surpassing Germany's per capita output by 2030. But here's what the data does show. The gap shrinks from $20,000 to $10,200 in 6 years. That's a 49% reduction in the economic distance between them. Poland's economy has grown 316% per capita since 1995. Italy, a G7 member, grew 117% in the same period. Germany grew even less. This isn't marginal outperformance. This is a category of economic dynamism. The psychological impact matters more than the exact crossing point. When Poland's per capita output reaches 85% of Germany's, which it will by 2008 or 2009, the old hierarchies collapse. Investors stop thinking emerging Eastern Europe and start thinking, where should my next factory? Let's ground this in what's already happened. In 1990, Poland's GDP per capita was roughly $5,000. By 2004, when it joined the EU, it had reached 44% of the EU. 1.5 average. Today, it's at 67%. That's 23 percentage points of catch-up in years. Continuous, uninterrupted, relentless convergence. Germany's trajectory moves the opposite direction. After reunification, it became Europe's growth anchor. But since 2015, cracks appeared. Energy policy tied to Russian gas, an export model dependent on Chinese infrastructure, and a demographic crisis that makes Italy look young. Those cracks became fissures in 2022. The question isn't whether Poland is rising. The question is whether Germany can arrest its decline fast enough to maintain the gap. Right now, the answer is no. Germany's 2024 GDP growth, 9%, stagnant, dragging down the entire Eurozone. Poland's was 2.7%. In 2200, Poland projects 3.3% growth. Germany projects barely above 1%. That differential, sustained over 6 years, is the mathematical engine behind the narrowing. This isn't a temporary blip. It's structural alignment driven by forces that won't reverse in a single election cycle. But what exactly are those forces? First driver, manufacturing migration. Poland is becoming Europe's new factory floor. and Germany is the source of. Volkswagen, facing $4 billion in losses and energy costs triple what they were in 2020, is shifting production eastward, not to China, to Poland. Labor costs in Poland are 60% lower than Germany's, but it's not just cost, it's competence. Poland produces 650,000 engineers annually, more per, its workforce is younger, more adaptable, and increasingly skilled in automation and AI-integrated manufacturing. The reshoring wave out of China isn't landing in Western Europe. It's landing in Krakow, Wrocław, and Gdansk. Companies want proximity to EU markets without Western regulatory friction. And energy prices. Poland's manufacturing output grew 53% since 2015. Germany's contracted 8% in the same window. Here's the kicker. Poland's consumption share in GDP growth is 53%. That means its economy isn't export-dependent like Germany's. It has a robust market-absorbing production, making it resilient to external shocks. Germany's consumption share? Far lower. It lives and dies by export performance. And Germany's exports are collapsing. Second driver, productivity catch-up. Poland's productivity still lags the EU, 1.5 average, but gap closes every year. In 2004, Poland operated at 44% of EU productivity. Today, it's 67%. McKinsey projects Poland will reach Italy's current productivity level by 2030. That's not an insult to Poland. That's a warning to Italy. Productivity gains come from three sources. 1. Capital investment. Foreign direct investment into Poland hit record highs in 2003, with over $22 billion flowing in. 2. Technology adoption. Poland's digital infrastructure ranks 24th globally, ahead of Spain and Belgium. 3. Education. Polish 15-year-olds outperform their German peers in math and science on PISA tests. When productivity rises, labor costs stay competitive. You get the holy grail, margin expansion without price inflation. That's why Poland's corporate profit growth outpaces Germany's by 40%. Germany, meanwhile, faces the opposite problem: high wages, high energy costs, and legacy industrial models that can't pivot fast enough. Productivity growth in Germany has been effectively flat since 2018. Third driver, Germany's energy crisis and deindustrialization. Let's talk about what broke Germany. In 2021, Germany imported 55% of its natural gas from Russia. Industrial electricity prices were among the lowest in Europe, 5 cents per kilowatt hour. Manufacturing thrived on cheap energy. Then came February 2022. By late 2022, German industrial electricity prices hit 50 cents per kilowatt hour, 10 times higher. Energy-intensive industries, chemicals, steel, glass, became uncompetitive overnight. BASF, Europe's largest chemical company, announced it would never return to pre-2022 production levels. Its energy mix is different. It still relies on coal for 70% of generation. Environmentally problematic, yes, but strategically insulated from Russian gas shutoffs. Polish industrial electricity prices rose, but only to 15 cents per kilowatt hour. Still 3 times cheaper than Germany's. The result? German firms either shut production to Poland. Germany's exports fell 11% in 2023. Poland's exports fell too, by 29%. But here's the nuance. Poland's export decline was driven by Germany's recession, dragging down demand for Polish intermediate goods. Poland's economy is now too tied to Germany's health, which creates, but also, opportunity. As Germany deindustrializes, Poland doesn't just absorb the factories, it absorbs the supply chain leadership. This isn't just economics, this is power redistribution. Poland's rise challenges 80 years of Western European dominance within the EU. For decades, Brussels meant and Paris. Warsaw was a secondary voice, but economic weight translates to political leverage, and Poland's weight is growing. By 2030, Poland is projected to surpass Israel, Spain, New Zealand, and Japan in per capita purchasing power parity. Not just EU laggards, developed OECD economies. That shifts NATO's internal spends 4% of GDP on defense, the highest in NATO. As its economy grows, that 4% represents larger absolute military capacity than Germany's 2% of a stagnant base. Poland is becoming the alliance's eastern anchor, not just geographically, but financially. Within the EU, Poland gains set of power by economic necessity. If Poland's GDP approaches Germany's in scale, and it's on track to hit $1 trillion by 2030, Brussels can't ignore Warsaw on energy policy, migration, or fiscal rules. There's a darker scenario, though. Germany and Poland remain deeply interdependent. 27% of Polish exports go to Germany. When Germany's economy contracts, Poland's export sector suffers. We saw that in 2023. If Germany enters a prolonged recession, it drags Poland down with it. But here's the twist. Poland is diversifying faster than Germany can recover trade. With the US grew 18% in 2024. Trade with Ukraine, even amid war, grew 22%. Poland is building economic resilience that doesn't rely solely on German demand. Germany, by contrast, remains dependent on China for 10% of exports. And China's economy is slowing. Germany's export model, built for a globalized world, is collapsing as that world fragments. The result is a strange paradox. Poland's success is partly parasitic on Germany's decline. It absorbs German factories and investment. But Poland's diversification means it could eventually decouple, leaving. That's the European map being redrawn in real time. And it forces an uncomfortable question. If Poland becomes economically comparable to Germany, does Germany remain Europe's leader by default? Or does leadership shift eastward, toward the economies still growing? Let's zoom out beyond 2030. Poland's ambition doesn't stop at closing the gap. McKinsey's 2030 vision for Poland projects the economy could double in size by 2035. That would put Poland's total $1.5 trillion, roughly the size of Spain or Australia today. That growth requires three things. First, infrastructure investment. Poland is building. High-speed rail between Warsaw and Berlin launches in 2027. The Via Carpatia highway connecting the Baltics to the Balkans is percent complete. These aren't vanity projects. They're trade arteries. Second, labor force stability. Poland's demographic profile is better than Germany's. Median age 41 versus Germany's 48. But it's not immune to Europe's aging crisis. Poland will need to either increase immigration or boost productivity through automation faster than planned the middle income trap. Poland's current per capita income puts it at the threshold where growth often stalls. To break through, it must shift from cost-competitive manufacturing to high-value innovation. That means R&D spending must double from its current 1.4% of GDP. To match Germany's 3 Poland pull that off? History says maybe. South Korea did it. Taiwan did it. Both had similar GDP per capita trajectories in the 1980s and 1990s. Both transitioned from manufacturing hubs to innovation economies. Poland has advantages they didn't: EU membership, geographic centrality, and a proven track record of consecutive years of growth. But Poland also faces risks they didn't: a war on its eastern border, political tensions within the EU over rule of law, and the constant gravitational pull of Germany's economy, which could either lift Poland further or drag it into recession. Germany's path forward here. Germany can't reverse deindustrialization overnight, even if energy prices fall, and they won't, structurally. The factories that moved won't return. Rebuilding industrial capacity takes a decade. Germany doesn't have a decade. It has an election cycle, government, and a political class still debating whether the problem exists. The optimistic case for Germany, it pivots to high-tech services, AI, and green energy manufacturing. It becomes Europe's innovation hub rather than its factory. That's possible. Germany has the talent and capital will that hasn't materialized yet. The pessimistic case, Germany stagnates into a slow-growth, high-debt, aging economy. It becomes Europe's Japan, respected, wealthy in absolute terms, but no longer dynamic. Poland's trajectory, meanwhile, points only upward. Let's return to the claim in the title. Will Poland overtake Germany by 2030? In per capita terms, no, not fully. Germany will still hold a $10,000 per capita edge in 2030 based on IMF projections. But that gap from $20,000 today represents a psychological and geopolitical overtake, even if the spreadsheet says otherwise. Poland's total GDP will still lag Germany's. Germany projects $4.5 trillion by 2030. Poland projects $710 billion. That's a 6-to-1 ratio. But here's what matters: the of change. Poland's growth rate is triple Germany's. That gap closes logarithmically, not linearly, and perception shapes reality. When investors, policymakers, and NATO strategists see Poland growing at 3% while Germany flatlines, they adjust their mental maps. Capital flows toward growth. Political weight shifts toward powers. Poland is already overtaking Germany in specific sectors: defense spending, foreign direct investment growth, consumer confidence. These aren't trivial metrics. They're leading indicators. The real question isn't whether Poland overtakes Germany on a single dimension by a single year. The real question is whether Europe's economic gravity center shifts east. The answer to that is already yes. Germany's era as Europe's uncontested leader is ending not because Germany collapsed, but because Poland rose. That's a different story than decline. It's transformation. Poland's 316% per capita growth since 1995 isn't slowing. Germany's stagnation isn't reversing. The mathematical inability is clear. Poland closes the gap. Maybe not by 2030, but by 2035, almost certainly. And once that gap closes, Europe looks fundamentally different. The EU's eastern flank becomes its growth engine. NATO's frontline state becomes its economic anchor. The map redraws itself. For viewers in This is validation. For viewers in the US and UK watching European power dynamics, this is the shift that redefines alliances for the next generation. For viewers in Germany, this is the wake-up call. Europe's future isn't written in Berlin anymore. It's being forged in Warsaw. If you to see more data-driven analysis on Europe's shifting economic landscape, who's rising, who's falling, and why the mainstream media keeps missing it, subscribe to Across the Globe. We cut through the noise. We show you the numbers that matter. Drop a comment. Do you think Poland's momentum, or does Germany find a way to reverse course? Let's debate it.